Please welcome to the stage Mike Crawley, CEO of Northland Power, Patrick Decostre, CEO of Boralex, and John Kousinioris, President and CEO of TransAlta, for a conversation with Bloomberg's Danielle Bochove.
Oh, good. We have all our numbers.
Thank you all. Welcome back, everyone. I hope everyone enjoyed the lunch. Delighted to have a chance to speak to all of you. We've got representatives from Alberta, Ontario, and Quebec here to talk about the markets. And I guess I want to start with a question about sort of contagion and fallout. It has been obviously a pretty tough year with some very high-profile examples of problems in the net zero sector. We had Ørsted, NextEra, Siemens, all having significant issues. Mike, let's start with you on this one, since I know you guys have some offshore wind. I know you've also exited some projects. How much have these stories sort of set back the sector in terms of risk?
Well, I mean, it's interesting when you look at IPPs in general, right? So we have long-term contracts, so our cash flow profile is actually quite stable, low risk. What I think the market has kind of looked at this year and realized, with all of the changes, macroeconomic changes and issues with the supply chain, is that sometimes getting to that cash flow, getting to COD, getting to financial close, there are risks, right? And that became apparent. So through this year, the companies that have done well have been those that have been able to go back to their off-takers and secure changes in their revenue contracts that can offset the impact of inflation, and that have the relationships with lenders and were able to pull together financings to support their projects and get their projects through. And then in some cases, you point out, we walked away from one project. We were able to sell our interest at a modest premium to our partner, and that was the right call. The other two projects, we were able to find revenue solves that kept our economics largely intact, and those projects are now getting built.
Patrick, same question to you. Obviously, your focus is more onshore wind, but are you seeing much sort of spillover from some of these broader issues that we've seen, especially in Europe? And to what extent, I guess, do you believe that investors are pricing risk in the sector correctly?
Oh, to the last question, the answer is no. I agree with Mike. There is some risk to go to this period of long-term cash flow and long-term everything stays fixed and settled. On our side, we have been able to increase off-taker price to transfer some risk to them. We have also been able to optimize the project. And what I think is more broadly, just take the example of Quebec. In Quebec, 50% of the 100% of the electricity is green, but just 50% of the demand of energy is green. So if you want to go to net zero, whatever the date, 2035, 2045, 2050, you need to change half of the energy from fossil fuel to renewable or nuclear. It's a lot of investment. So what I think is the long-term perspective, the risk is not looked correctly, and we have all three here. We have the right team to execute, and the execution risk, I think we're taking care of that a lot presently.
And in terms of closing that 50% gap, I'm sure we'll dig into some of these themes, but what is this, especially for our audience who is perhaps less familiar with Canada, like what is the single biggest hurdle to that?
I think there is not just one. The most important thing is first in Quebec, to change the narrative, to say we have surplus for the next 10 years and we will export to New York, Massachusetts, and everywhere, and we don't have to do anything. We need power, we need to install wind farms, essentially, because there is, if you want to build big dams, it will take time, and social acceptability, I guess, will not be there. So the single main point is changing the narrative and social acceptability. But we're used to do that. We have developed in France. It's not easy. We have developed in Ontario. It's not easy. We are developing in New York. It's never easy.
It's how you create value.
Yeah, exactly.
John, TransAlta is a little bit different in that you still generate most of your power from fossil fuels. Obviously, you have sped up the transition, I know, away from coal generation, but you're relying on natural gas as a bridge, right? How is the market's current perception of renewable risk affecting your business?
I'd say, first of all, I would echo what Mike and Patrick said. I think they're right. I'd say we're in a, I think what they want to see is discipline, is what I would say. That's what we hear from investors, and that's sort of our mantra as a company. And I think there are a lot of risks with development. There's a lot of opportunities in development. So we've had challenges from financing. When I say we, I mean the industry generally. Financing, supply chain, permitting, labor costs. All of these things take time to sort out. Even just the quality of equipment that we're getting from OEMs. And I think what our investors are basically telling us is we want you to be super disciplined. We want to make sure that you're pricing in all of those risks, you're doing proper risk assessments, and that you're
upfront. So all of that is baked in
upfront as much as you can. And it's not that we haven't been doing it. I think that as the industry is maturing, I think a number of things are just becoming much more evident or self-evident in terms of pressure points, and they change. There's an ebb and a flow to what happens, and I think they're just saying, look, be very disciplined. If you're seeing projects that don't make sense, don't do them. If you're seeing projects that do make sense, you should do them. And there's appetite to get those projects done and get them financed in an appropriate way.
I want to talk about the role of government in all of this. And I guess the first question to you, Patrick, on this. But, the recent Canada budget update included contracts for differences as one way of sort of de-risking the sector, taking some of the risk out of the carbon tax. By guaranteeing a minimum price for carbon credits. What do you see as the most useful thing that the government could do to help the transition to net zero happen in a timely fashion?
Mm-hmm. But I come back to my 50%, which is 63% in France, 78% in Ontario, 73% here in New York. So we need volume. That's the first thing. Mm-hmm. We need predictability. We need to know if there is a tender next year or the year after, but not, we come from a period where we were all chasing niche, okay, and jumping on niche, but it's not, the situation is the same everywhere today. Transition needs to be done, and then, so volume, predictability, and recurrence. We don't need a big tender next year for 6,000 megawatt in Quebec. We probably need 4 1.5 gigawatt tender for the next 4 or 5 years, but so predictability, to be prepared to invest in developments and be sure that we will compete to make the best price, and the price will be okay and will be the best price. But we are not investing, and all of a sudden, okay, everything stopped because the government decided to stop. That's what happened in Canada in 2018 in the different provinces. That's what happened in the UK. That's what happened in France sometimes. So it's something common to government not to do volume, predictability, and recurrence. They just have to do that, and they will have the best price.
Mike, do you think the government should be doing more? I mean, it's really interesting when you look at a country like the UK, where they have significantly, for example, upped the price for offshore wind recently because they weren't getting any buyers in the auction. Like, governments are doing some pretty aggressive measures to be supportive. What should our government be doing?
I think that's the big story of the last year, that actually the big positive story of the last year. There's a lot of negative stuff in the last year, obviously, we just talked about. But the positive story is that the demand for renewable energy has remained remarkably resilient. And if anything, it's increased over the last year, right? And driven by governments, but also driven by corporates, too. And what you've seen in the last 3 months is prices really move up, right? Really adjust to the cost of capital, the cost to build. So you gave the example of the UK, where they've adjusted their ceiling price on the next round of auctions by about 40%, I think, roughly 30 or 40%.
I thought it was more than that, but yeah.
Maybe more. NYSERDA, they just closed an auction for offshore wind 3 weeks ago. I think the clearing price was 145 USD megawatt hour, and they added in some indexation, I think, up to when the projects reach COD or financial close. And you compare that to the PPAs that are being handed back right now by Ørsted, Iberdrola, others for offshore wind projects. I think they were around $100 USD a megawatt hour. So you can see how prices are already adjusting to the cost to build and the cost to finance. So I think the resilience of the demand and the elasticity in terms of the price is really the big story coming out of the end of this year, looking forward. If you look at kind of renewables over the 20-year history, the first part was offering big tariffs, high fit contracts to attract capital. Second period was from 2010 to 2015, as the risk kind of came out of the sector, you still had these high tariffs contracts hanging around on projects. So there were some pretty good investments between 2010 and 2015. 2015 to 2020, everybody was rushing in. Capital was rushing in. The price was coming down. Governments were procuring more. Corporates were getting in. And the supply chain got stretched. Margins came down for everybody. And it all came to a screeching halt at the beginning of this year, right? When costs went up and interest rates went up. But there's been a correction. And you're starting to see that correction take hold. And what is true going forward is, it seems clear, is that there's going to be a lot of green electrons that need to get built out over the next few years, a lot of capacity that needs to get built out. What was needed was a correction so that everybody in the supply chain can make money, and that seems to be where we're headed going forward.
You agree, John?
I do. I would say the one thing, and look, maybe just speaking uniquely from an Alberta perspective, where we probably have one of the more carbon-heavy grids in the country. I think you can underestimate the challenge of the transition. And what we often talk about, and really just picks up on themes that my two colleagues here have talked about, is I think we talk about a three-legged stool. And I think there's been a lot of discussion around decarbonization and the clean. But the other two legs of the stool that people haven't talked enough about have been affordability and reliability. And I can tell you that is now very much top of mind, certainly in our jurisdiction. And frankly, we see it in all three jurisdictions in which we operate, certainly the US and Australia. People are worried about it. And if the costs, get ahead of where they need to be from an affordability perspective, there'll be a reaction and there'll be a backlash, and you won't actually succeed in moving forward. And, if you're in a province like ours that, it's February and it's -20, there is no wind. There's like 5 hours of sunlight. How are you going to backstop the system? And, we saw what happened to Texas here not that long ago. That's, Alberta's that times 20 in terms of what the impacts would be. So I think it requires kind of a responsible sort of transition to take place. And I think it's been, we're talking about the role of government. It's been kind of laissez-faire, I would say, until now. And I think now that kind of the renewables are coming in volume, as they should, in an appropriate way, it kind of requires it to be managed a bit as we kind of go forward as well.
That's what, sorry to interrupt you, but that's what we're seeing starting to happen, I think, now.
Totally.
Coming out of this is you're seeing a lot more focus on system planning around transmission enhancements, storage in Ontario and in other New York states looking at that, and figuring out how the system's actually going to work, number one. Number two, looking at the supply chain, right? Which is what you're seeing in Europe and other parts where governments are stepping forward to actually incentivize investments in the supply chain. Governments shouldn't be talking about targets for renewable energy anymore and big ambitious plans to procure lots of renewable energy. It's clear what the need is, right? They don't need to talk about that. What they need to do is make it work. Yeah.
The momentum's there. But the costs are real, right? I mean, I remember we tell people all the time, 3 years ago, you could build an onshore wind farm for about $1.5 million a megawatt. Yeah. It's like $2.5 million today. Yeah. I mean, it's not a small change. It's a big change. And people have to pay for that. And it impacts industry, it impacts everything. So I think there's just has to be a recognition of it's going to take some time.
Patrick, I'm going to let you get in a second, but I want to ask you first of all, like just on that idea of investability, right? There is a balance here. So the news in the last week out of Alberta has been the Premier pushing back against the 2035 target for net zero. I understand everything you're saying about the need for, a bridge period and the sun has to shine and the wind has to blow and all of that. But to what extent are you concerned that Alberta's going to get left behind, that there's going to be a situation in which the province, industry is not going to want to come to the province because you're not going to be able to guarantee the clean energy that's going to be readily available in other jurisdictions?
Yeah, I can
Speed, not important, I guess, is the short
Look,
question.
I think there's no jurisdiction in Canada that has done more to decarbonize than Alberta has, certainly from an electricity perspective. In fact, I don't think anybody's done more than our company has.
Because the bar was so high to start.
Well, yeah, maybe, but it's just about you developed your energy sources on the basis of what the natural advantage was in the jurisdiction in which you were. Alberta doesn't have water. Alberta has gas, it has coal, right? We don't. So it isn't surprising that people went to develop the energy needs in the jurisdiction based on the natural resources that they had. So we don't have the water BC does, we don't have the water Manitoba does, we don't have the water Quebec does. We never had the nukes that Ontario had, or frankly, even the hydro that Ontario had. So it's just a reflection of the natural evolution of the province. I can tell you now, I mean, the in-migration of people and business in Alberta is high, probably higher than it's been in a long, long time. I think people are questioning things like affordability, and they're kind of saying, look, it matters. There's a balance that we need to go forward. Will Alberta continue to decarbonize? Absolutely. Absolutely it will. I mean, I look at us. We used to emit 42 megatons a year of CO2, 5% of the Canadian total. We're sub 10 now. Huge progress, and we're going to continue to decline. The province will continue to decline as well. But you know, having a discussion that says, here is the date, and we've got to be net zero by 2035, and the system operator looks at it and says, from a cost and technology perspective that we have today, we don't think we can get there. I think it's a fair conversation to have. Doesn't mean we're not going to decarbonize. They're kind of saying, let's talk about the realistic pathway to get there.
Mm-hmm.
Patrick,
like it's relentless, right? The decarbonization.
Position with all of your hydro. What would you like to say?
Some points is, I think we need to look to what happens in Europe the last years.
Okay.
The first thing is the grid. The grid in Europe is really more interconnected than anywhere in North America. That's the first point. And the fact, last week I was with the CEO of RTE, the largest transmission system operator in the world, the French one, and he mentioned that he had a conversation with a Quebec high-level civil servant, and the person asked, is it possible to go further than 15 gigawatt in Quebec in wind? And the answer was, I don't understand your question. For sure you can go, because you have this incredible storage. In Europe, we would have this incredible storage, and we're even further than that. So I agree there is some place like Alberta which are specific, but or if you look to the northeast of the US and the eastern Canada, probably interconnection is something we need to all think a little bit more, because this you share margins. This is what first thing. The second thing we can look to Europe.
Sorry, so you're talking about north-south interconnections, or you're talking about
east-west?
East-west,
like between provinces, not to the U.S.
And also to the U.S. Because there is a known MIT study 4 years ago which shows that it reduced the cost of the transition. Okay, that's the first thing. The second thing is, look at the crisis last year in France and in Europe. You know, all the corporations were coming to us before to say, I want to buy green electricity because of ESG target. No, they want to buy green electricity to have a stable procurement on the long term and a stable price, and not to be exposed to the next fossil fuel crisis in Europe or the next nuclear crisis in France. But how to say is, I think there are some local points, but I agree with you, the transition should be there, and it would be. Yes,
it will be.
It will cost potentially a little bit more than in the past, but it will cost less than not doing the transition. And that's why the narrative has to change. You don't have, you know, it's always good to look to the past and say there was a paradise. But the future, we need more energy.
Grid stability in Ontario is obviously an issue. I wish we had somebody focused on nuclear on the panel, but I mean, maybe you can talk to us a little bit about the situation in Ontario.
So I'd say in general, like, I mean, when I started doing this 20 years ago, right, as a child, the debate was always between transmission solutions and generation solutions, right? And the generators were always kind of pushing, saying, oh, don't do that transmission build out, because we can figure out a generation solution, right? And it was obviously in the generator self-interest to push that. What's different now is just the volume of electrons, of energy, and it's energy. I mean, it's not so much about climate policy as it is just about the volume of energy that's needed for data centers, for repatriation of manufacturing, all of that. And Ontario's at the center of that, right? And so it's you need both, and you need to be able to move electrons around. You need to be able to move electrons from areas that have a good wind resource, good solar resource, into areas that don't. You need to be able to balance grids out, and all of that is what's needed. So I think the most important thing now is that system planners and governments sit down and figure out how to plan out the grids of the next 20, 30 years, because they're all long lead items. Building a transmission line from start to finish takes up to 20 years, but certainly 10 to 15 years, right? So you got to start planning that stuff now if you want to have a hope of meeting any of these net zero targets that have been laid out by politicians.
Same question to you on grid stability in Alberta. How much of a challenge is it? Are you starting to see the necessary funding appear to solve the problem?
So it's a bit of maybe a slightly different issue in Alberta. So Alberta's had probably the greatest amount of renewables development in the country over the last few years. It's exploded, right? Which is another point to kind of point out. So the way the system works there is basically when you build your facility, you basically have a right to have it connected into the grid. So the costs of transmission and distribution have skyrocketed. So if you look at people's power bills, it's 70% wires. It's not the electrons. It's actually the infrastructure required to build it out. So it's becoming a challenge. And as the renewables come in, the intermittency is increasing, and the renewables will come in, and the intermittency will increase. So issues around reliability have become top of mind. I mean, it's top of mind for the Premier, it's top of mind for the ISO. You can see it coming. Frankly, we were talking about it 3 years ago. But it's an active discussion today, and the question becomes, kind of going to what Mike said, what do we do to remedy this? Not to halt the progress that's taking place, but what do we do that's cost-effective? You know, going back to the three-legged stool, how do we do this in a cost-effective way that maintains reliability? And do we need to procure more ancillary services? Do we need more fast-frequency response? Do we need, batteries to help that? Do we need to maybe keep a bit of gas in reserve to make sure that, when we need it at appropriate points in time, it's there, pending kind of a technological shift from an economic perspective that lets us deal with these issues, which is probably more of a 2030s issue as we go forward. So you need to be mindful as you move forward, and I think I'm seeing that.
I think I've got time to ask each of you one question on supply chain since you brought it up, Mike, and I'm going to start with you on this one, Patrick. Siemens obviously is kind of the poster child for the struggles in that area, trying to fix a fault in thousands of turbines this year. How vulnerable is Boralex to global supply chain challenges, and how are you managing the risk?
Yeah, we are as all companies say, it's a question when you come from probably 10 suppliers 5 years ago to two in Canada, 2.5 because GE is in the US. Yeah. Siemens, you don't want to touch that. So that's an issue. So you have to work with them in advance and partner.
How far in advance?
When you develop a project, that's my view, if the project is big enough, you have to work with the supplier early and try to find a way contractually to incentivize both to do the best project at the end. So that's one thing. You also don't want to sign just exclusivity with one and let the other, so you need to continue to work with both. That's what we are doing in France and in Canada and in the UK. So I think this, and one thing which is, it seems to be simple in the past to buy wind turbine and install wind turbine. In a real normal industry, you go and you make lots of check technically in the factories during production. You have more engineering, take from say other industry the best practice of managing the supply chain. Probably when money was flowing the last 5 years, lots of people didn't look at this. Mm-hmm. We need to go to that. I have people going to Finland next week and seeing things. So it's normal and it's not, it's high technology. A wind turbine is high technology, yeah.
Supply chain risk for TransAlta?
Look, I mean, I think it's always been there. I think. Look, we don't expose ourselves. So when we are commissioning a new renewables project, whatever it is, I mean, we lock everything up at the time the PPA is signed. So we lock in all of our turbine costs, construction contracts as much as we can. We try to fix all of the costs contemporaneously with the signing of the PPA. That's something we've always done. Look, costs are higher. Quality control is more of an issue to the point where we've even, I know in our Oklahoma projects, we've actually dictated which jurisdictions we want the equipment to be manufactured in, because we have found the quality control to be better in some jurisdictions versus others.
Which jurisdictions?
So, with our wind farms there, we found stuff that was being made in North America and Europe was just generally in the moment a bit better than maybe some of the stuff that at least our experience has been that was being built in Asia, certainly during the pandemic. The timelines are long. I mean, getting a transformer, it's a year and a half to get a transformer, and the costs have gone up. So it all takes a longer period of time. We accept early delivery sometimes of components, well before kind of a just-in-time sort of delivery, deliberately to make sure that we don't have any issues around, making sure that the wind farm gets built in an appropriate period of time. You have to manage it actively. We probably were lulled into a sense that we maybe didn't need to as much, but you do.
Mike, about 30 seconds. Do you want to close us out? What do you think?
Yeah, so I mean, Siemens Gamesa, they're a supplier on the Taiwanese offshore wind project, but their issues, their quality issues are with their onshore fleet, not with their offshore fleet. There's no quality issues there. And it's been clear in the last 2 weeks, the 3 weeks, that the government of Germany is going to stand behind Siemens Gamesa. So I think we're quite comfortable with that risk. In terms of Northland specifically, we've closed 2 huge financings this year. We've got 2 large offshore wind projects now fully under construction, a battery storage project in Ontario now well under construction. We've got 600 million roughly of CAD of EBITDA coming online in 25, 26, 27 with those projects. We don't need to source any new investments or start any new projects, tap any supply chains, or source any financing to meet our growth targets by 2027. Anything that we do will be discretionary and once supply chains settle down. So I think where we're ending the year versus where we started the year, we're feeling pretty good.
All right, nice place to end this as well. Thank you, gentlemen, very much for making some time for us.
Thank you.